Hello there, you go to school and colleges and wonder how your universities make money. In the COVID situation, declining enrollments may force schools to seek new revenue streams. So, without further ado, let's get started. My name is Rohit Manjarwal. Colleges and universities have a variety of revenue-generating options to help them run their budgets and educate their students. These include tuition and fees that students must pay in order to obtain their degrees. As a result, graduates can reap significant benefits. Education has long been linked to higher lifetime earnings. For example, a bachelor's degree is worth $2.8 million in lifetime EA. However, making money can be difficult for higher education institutions when attendance is low. Total college enrollment fell by 3.5%, or 603,000 students, for the spring 2021 term. Two lower enrollment numbers can put more pressure in schools to find new revenue streams, or force them to cut budgets, raise tuition, or even close their doors. Colleges and universities can be funded in a variety of ways. Where schools get their money depends on whether they are a public or private institution, as well as whether the school is for-profit or not-for-profit. For starters, the federal government provides significant funding to colleges and universities, including both 2- and 4-year institutions. For example, in 2018, the government paid out $149 billion to colleges and universities. This funding was distributed to schools in 3 ways. Student financial assistance, including grants, scholarships, work-study, and loans. Research grants. Contracts for goods or services. Tuition revenue and other non-federal funding are received by all types of schools, but the formula differs by type. How are public universities funded? Students' tuition and fees account for a sizable portion of the funding pie for public colleges and universities. The average in-state student at a public college paid $9,580 in tuition for the 2021-22 academic year. Out-of-state students paid an average of $27,437. State universities are also supported by state tax revenues, though the amount has decreased significantly in recent years. According to a study conducted by the Center on Budget and Policy Priorities, 2- and 4-year colleges received more than $6.6 billion less, in inflation-adjusted dollars, in the 2018 school year than in 2008, according to the CBPP report. One result of the decline in state funding is a 37% increase in tuition since 2008. Endowments are another source of revenue. An endowment is money invested in a college or university with the intention of supporting its mission. Endowment funds may be used by schools to fund research projects or to expand aid packages for eligible students. The average endowment of a public college or university is $35.4 million. How do private universities make money? Private colleges and universities generate revenue by charging students tuition, which is significantly higher than tuition at public colleges. Tuition and fees at a 4-year private university cost $37,200 on average for the 2021-22 academic year. That means that the loss of even one student could result in a loss of nearly $150,000 in tuition revenue over the course of 4 years. Private schools receive funding from endowments in addition to tuition. Private colleges and universities have a median endowment of $37.1 million, though some schools have much larger endowments. For example, Harvard University's endowment distributed $2 billion in the fiscal year ending June 30, 2020. This money was used to support the school's academic programs and scholarships. Because of their large endowments, some schools can offer very generous scholarships to offset their high tuition costs.
I believe there is a lot of information in today's video. I hope we can meet again for a future or new topic. There, I'll tell you all about the stock market and trading. Subscribe to my channel and like my videos for more information, and I'll see you soon. Bye.